Hey guys, today is all about accounting and to be specific, balance sheet concepts. So, since we're learning about the balance sheet, we must first ask ourselves what a balance sheet is. So, what is a balance sheet? Okay, so a balance sheet is a formal document that captures the financial position of a company at a certain point of time. You could think of it kind of like a photograph. It's also called the statement of financial position sometimes, and it summarizes a business's assets, liabilities, and equity. Equity could be shareholders' equity or owners' equity. And these three things are very important, and knowing the relationship between assets, liabilities, and equity is crucial to understanding why the balance sheet is called the balance sheet. So I'll walk you through how these three things balance the balance sheet right after going through with what assets, liabilities, and equity actually are. So assets. When asking a newbie about assets, somebody who doesn't know the definition of it at all, they would come up with things like, my house is an asset, my car is an asset, maybe some money I've lying around is an asset, land. So maybe your house is worth $250,000 and your car is worth $30,000. Maybe your grandma gave you $200 for your birthday. Maybe this piece of land your parents own is worth $1 million now. So what do these all have in common? Well, these all hold value. All these numbers, these are value. So objects that hold value are assets. What else do these have in common? Well, these values we place on these different assets, they're cash values, they're money values. So, and we own them. So items of ownership that can be converted into cash. That's all assets are. They're things we own that are valuable. Now liabilities. What are liabilities? Well, when you think of the word liability, you might think of the word liable, meaning you owe someone something. Owing someone. Oops. So person A might lend me $10. Now I owe me right here. Now I owe person A their $10 back. They let me borrow it. They lent it to me, but I still owe them now. People think about bank loans and phone bills because accounts payable. Because these are all things we owe. Another way to think about liabilities are obligations or debts. Debt is a really common used word for liabilities. And now finally, the trickier out of the three, equity. So we talked about how assets were valuable items or objects that we own, how liabilities are debts or obligations that we owe someone else. Now what is equity? Well, equity is how much you or your company is worth. So how much you are worth. Well, let's think of it in a simple way. There's owner's equity for sole proprietorships and shareholder equity for corporations. But we'll think of a simple example right now. Okay, let's come up with a company. Cars. This is sole proprietorship. We own a little shop. Oops, sorry, my drawing is not the greatest. The shop is worth $500,000. We got it for $500,000. We own this car where we drive around and make our business deals. $25,000. Now we have this much cash in the bank, and this is about $10,000. House, car, and cash. You can already tell these are assets. So assets. Here are Cars assets. Now here, to buy the house, the bank gave us, so here's the bank, bank lent us, not gave us, lent us $250,000. So half of the money needed to buy this little shop of ours. So this is us. So now that means we owe them back $250,000. For the car, they lent us, let's say they lent us $10,000. $10,000. And now we owe the bank back $10,000. By us, I mean me. It's a sole proprietorship. Okay, so we can tell owing liabilities. Now, how much is our company worth at the end of the day? How much, after all these liabilities are paid off with our assets, are we worth? So this is what we do. We take the total of our assets, which comes to $535,000, not $535,000, and our liabilities, which we have to pay off. How much do we have to pay off? We have to pay off $260,000. So how much are we worth? So we take our assets. If we were to sell our car, our house, and keep our cash, and have $535,000 and pay off $260,000, we would have $275,000. So this is how much our company is worth. So that is our owner's equity. You know, equity is a long topic. It can be confusing, but I'm sure there will be future videos about different types of equity and more about it, like shareholders' equity and a little bit more on owner's equity. But basically the key is your equity is how much you or your company is worth. Okay, let's move on to our actual balance sheet now. So this is the formal document, the balance sheet. So here we start off with our company name, the word balance sheet, and the date. Because remember, a balance sheet is just capturing the company's financial position at a certain time. We have our assets on the left, and we have our liabilities and equity on the right. Remember? Okay, no. So right now, right here, we're going to make a balance sheet for our little company, Con Cars. We just write balance sheet. And we'll write July 31st, 2016. So we have our assets here. What were our assets? Our assets were our building, car, cash. So our building was how much? Our building was... Okay, our building was $500,000. $500,000. Our car was $25,000. And our cash was $10,000. That brings us to $535,000. Then here we have liabilities and equity. So here we have, say, bank loan. Loans. We'll group into one. So remember, one bank loan was $250,000 for the little shop and $10,000 for our car. So that comes to $260,000. And then we'll write our equity right here. Equity. And our equity was $275,000. $275,000. So the total comes to $260,000 plus $275,000 is $535,000. So see here, following this format, sorry, you guys probably can't see, following this format right here, we were able to make our balance sheet balance. You see here what we saw before, assets minus liabilities gave us our equity. We could also write it as A equals L plus E. This is what makes a balance sheet balance. Thank you so much for your time, you guys.